Hello and welcome to traders and investors. I'm glad to present to you the cryptocurrency market review presented by analysts and experts from FX.co portal. Here we go. Over the weekend, Bitcoin managed to rebound from 62,500 USD, reaching a high of around 64,000. BTC could rise in the coming hours, although signs of exhaustion are evident. A Bitcoin consolidates above 21 SMA, it's a sign line on a graphic, at around 63,400 USD in the coming hours. We could view this area as a good entry point for long positions, with targets at the 200 EMA, around 67,537 USD. If downward pressure continues, but the lower band of the uptrend channel proves to be strong support, we could view the zone around 63,000 and 62,900 USD as a good buying opportunity. A technical bounce around 0.8 Murray level at 62,500 USD could give Bitcoin a bullish outlook in the coming hours. Conversely, trading below the zone could keep Bitcoin under bearish pressure, and we could expect it to reach the psychological level of 60,000 USD, or even minus 1.8 Murray. The ICAL indicator is showing a positive signal, but we could expect Bitcoin to consolidate. However, if the BTC price remains above 62,500 USD, we could open long positions. On the daily time frame, Ethereum remains firmly a bearish trend. The key CHOCH level is now located at 2477, marking the most recent lower high within the current market structure. As long as the price remains below that level, the broader bearish trend remains intact, and there is no technical basis for declaring a trend reversal. Ethereum recently reacted with only a minor deviation to the latest bearish fair value gap. A similar setup was observed on Bitcoin, providing additional confirmation that sellers remained in control of the market. As a result, traders had a strong technical foundation for initiating short positions ahead of the most recent sell-off. The combination of bearish market structure and rejection from key supply zones offered a high probability continuation setup. During the latest leg lower, several new bearish fair value gaps were formed on Ethereum. However, we believe traders should place greater emphasis on the bearish daily FVG on Bitcoin, as Ethereum's newly formed imbalances a less distinct offer weekly technical clarity. Given Bitcoin's dominant influence on the broader crypto market, its daily bearish FVG remains the more important reference point for assessing future downside risks. If Bitcoin receives a reaction from the supply zone and resumes its broader decline, Ethereum will likely follow suit and continue trading in the line of the prevailing bearish trend. On the 4-hour time frame, Ethereum continues to trade within a bearish structure that remains part of the broader downtrend visible on both the daily and weekly charts. At the same time, the market is undergoing a modest corrective recovery, which could extend further in the near term. The CHOCH level that would invalidate the current bullish correction is located at 1,600 USD. Yesterday, Ethereum successfully reacted to the fair value gap between 1668 1706. The pattern produced a clear price response, generating a bullish setup that was later confirmed on the M30 timeframe. From a purely technical perspective, the buy signal was valid and offered traders an opportunity to participate in the ongoing recovery. However, it is important to keep the broader market context in mind. Any upside movement in Ethereum under current conditions should still be viewed as a correction, with a larger bearish trend rather than the beginning of a new bull market. For that reason, traders should carefully assess their risk tolerance and trading style. Counter-traded opportunities may offer short-term gains, but they carry a different risk profile than traders aligned with the dominant higher timeframe trend. Whether to trade these corrective moves or wait for fresh trend continuation setups is ultimately a decision each trader must make based on their strategy and objectives. That's all for today. See you online soon and good luck.